Welcome back to the channel, guys. Thanks for the support on the previous video. In today's video, we're going to understand how to analyze investment opportunities well, and we're going to apply a framework of analysis that I use to identify the best opportunities here in Dubai, and we're going to apply it to 3 case studies. At the end of the video, we're going to be showing arguably one of the most exciting investment opportunities here in Dubai, so stick around for the video. It's not one to miss. Before we jump into the video, a bit of history about myself. My name is Fez Osman, previously worked in asset management, and asset management taught me a lot about investing. I shared the floor with multiple fund managers. I really understood how to analyze investments. So I'm using this framework of what I've learned to off-plan investing here in Dubai. In asset management, investment houses have 2 strategies, broadly speaking. You have growth and you have value. Depending on the risk profile of the client and depending on how much returns they want to achieve over what time period, different strategies are used. In growth, you're picking stocks that are performing well now. They're profiting extremely well, but that growth is expected to continue. In value, you're looking at stocks that are trading below their fair market value. And so I want to adopt this mindset of value in the world of off-plan investments here in Dubai. And this is the framework that I use to identify the best opportunities for my clients. So come with me and come and take a look inside. So we're just at the Oasis mock-up. As you can see, this is the entire master plan for the Oasis. Majority of this master plan has now been launched and sold out, but let me just give you a quick run through. In August 23, we had the launch of Palmyra. Following that, we had Palmyra 2 and then Palmyra 3. And then we had, obviously, Mirage was the next set of villas to launch. And then last year, we had the launch of the Levita Mansions just here. At the start of this year, we had the launch of the branded villas. So we've got the Address branded villas over here. We have the Palace branded villas over here. And then we've got new launch, we've got Maraba 1 and we've got Maraba 2, where we still have availability directly from the developer. This land parcel here is yet to be launched. Why is this land parcel significant? Because in terms of the value for money that you're getting, I'll give you an example. For context, in this land parcel here, we have Jumeirah Golf Estates. If you want a renovated villa in Jumeirah Golf Estates, right, you're going to be paying nothing less than 3,500 dirham a square foot, going up all the way to around 5,000 dirham a square foot, right? If we look at the sizes that we're getting here in the Oasis, if we was to pick up any of these villas and drop them in mature, established communities, you'd be trading at nothing less than sort of 40 to 50 million dirhams, period. What I'm trying to say, this is a product where we can comfortably say is trading below its fair market value. So today, if we're talking about growth versus value, on one end of the spectrum, you have Jumeirah Golf Estates, Dubai Hills, Jumeirah Islands, where villas are trading at between 3,500 to 4,000 to 5,000 dirham a square foot. Whereas here, we can buy in at, say, 2,000 dirham a square foot. So we have that buffer. There is a fair market value to be realized. What are the other complemences we're looking at to see if an area is going to perform? One of them is, where is the government spending their money? We know the future of Dubai lays in the south, right? This land parcel is going to be developed, loads of infrastructure is coming there, including the Al Maktoum Airport. And what are we looking at? So the kind of infrastructure developments happening around the Oasis is that on this side, we have the Al Fai Road extension, which is going to directly connect you to Al Khail Road. And then also we have Etihad Rail coming up. What is this going to do to the value of the property prices? Well, given that this infrastructure development is going to be so significant, we can guarantee that the prices here are going to increase. That gives us confidence as to why this area is going to perform, because around you already have existing infrastructure. We have schools, we have retails, we have world-class golf courses. These are amenities that, families relocating from the likes of UK, Europe, US, these are the kind of things that they're going to be looking at when they're going to be choosing their next home. They want to be close to schools. They want to be close to golf courses. They want to be close to amenities. All of this infrastructure is going to determine where you're going to choose your family home. Again, part of our exit strategy, we need to identify who is our target audience. If we're going to be targeting families, migrating all over the world, high net worth individuals, we need to consider what kind of things they're going to be looking at in the community. Exclusivity, as I've already said, the project is pretty much 60% sold and sold out. There's only going to be 3,100 villas in this community. We've already launched around 60% of that. Majority of the buyers buying into this community as of today are end users. They want to live in this community because they know coming to Dubai, they're going to be overpaying on location for renovated homes. Okay, granted, areas might be great, but here they can see that there's true value to be tapped into. So they're going to be buying these directly from a developer on a payment plan, managing their cash flow. They're happy to rent for say 3 or 4 years, and then they can move in to their dream home here. Why is that significant? Because if majority of the buyers in a community are end users, that means when it comes to handovers, there's going to be constricted supply on the market. So the amount of available units that are in circulation, basically there's going to be less supply in the market when it comes to resale activity. Again, that's going to boost the prices in the community. When we think about value for money, right? So we've already benchmarked it against existing communities and what their trading market price is. But then if we have a look at specifically the Oasis, when we consider the floor plans, location, size, the scale of the community, you know, only 3,100 villas spanning over 100 million square foot, there is a significant price to value ratio, which is going to be recognized upon handover and after handover in the resale activity here in the Oasis. So just for context, to explain the density and the exclusivity of the community, here in the Oasis, the land parcel is around 100 million square foot. Right, only 3,100 standalone villas and mansions, whereas over here in this entire land parcel of Dubai Hills, spanning over 120 million square foot, so very comparable in size, but here we have 33,000 livable homes. So when we talk about exclusivity, we can refer to the density of the actual community itself. Right, so we're at the next sales gallery here in Mina Rashid. We're at the Beyond sales gallery. Obviously here for the Dubai Islands launch, highly anticipated launch on Island B. Just thought we'd give you a bit of context as to who Beyond are, what they've already done, and what they're looking to do in Dubai Islands. So Beyond are a sister company of Omniat. So when we think of Omniat, we think of ultra luxury. You know, if we look at some of the developments they've developed, we can think about, you know, One Palm on Palm Jumeirah. We can think about the Dorchester Collection, the Lana in Business Bay on the waterfront. These are the ultra luxury developments here in Dubai, trading at say 8 to 12,000 dirham a square foot. So, you know, last year we had the launch of Beyond, who they're a sister company of Omniat. So they're taking elements of that luxury pinnacle living, but then they're delivering it to a more of an affordable luxury segment. So Beyond have acquired 55% of the land parcel here in Maritime City, and they had developed a couple of buildings before they launched their first community here in Maritime, but here is the start of the community. So the first launch in this development was called O-Rise. And this is actually where our investors got in because we spotted an opportunity in the market. That opportunity was that the price per square foot was too high in Mina Rashid. Emaar, you know, significantly increased the prices, you know, launch after launch. So then what we did was we identified arguably a better quality product with Beyond, and we identified it at a cheaper price per square foot. Now, yeah, of course, it's not all about price per square foot. It's all about the price to value ratio, but we saw better value ratios here in Beyond. So our investors secured units here in Ori. So to give you some perspective, this launch started out at say 2,900 dirham a square foot. Depending on the view, our investors secured full sea view units at 3,000 dirham a square foot. For instance, a 2-bedroom apartment would have costed 3.9 million dirhams. 6 or 7 launches have now taken place in this community, and you know, 2 bedrooms are now trading at 4.8 million dirhams. So to put that into perspective, you're at 4,000 dirham a square foot. So yeah, our investors are already up 35%, and they're extremely happy with that progress. So yeah, again, if we think about that framework of growth versus value, you know, your equivalent today of a growth stock would be your Palm Jumeirah, where there's been exponential growth for waterfront communities, especially those with beachfront access. That would be costing you anywhere between sort of 5,000 to 8,000 dirham a square foot. Whereas here we've identified real value. And with what Beyond are launching in say Dubai Islands, even at 3,500 dirham square foot, it offers great value. Another important thing to know is that developers often increase the prices in the upcoming launches. So as an example, O-Rise was launched at say average 3,000 dirham a square foot, and then they gradually increased the prices in say Talia, Morale, Sulava, to prices have now reached 4,000 dirham a square foot. So the initial investors that buy early into the phase of a master community or development, those are the ones that reap the most rewards in terms of capital growth. We've got the launch of the new master community by Beyond in Island B of Dubai Islands, and we have the first launch, which is called Haddo. To give you some perspective on the master community, we have the first launch, Tower A and Tower B of Haddo, both are G+21 structures. We also have more launches to come in terms of mid-rise and high-rise buildings. At the front, we have low-rise buildings. These are G+6. We also have a handful of villas on the back end and on the outskirts of the community. And then we also have a couple of hotels and clubhouses that are going to be part of this community. We've got 6 kilometers of open beach. We also have 140,000 square foot of open greenery, which is going to give a beautiful blend of zen and waterfront community to Dubai's coastline. So why do I think this community is unique? So firstly, it's an actual community in Dubai Islands, which has not been seen yet. Not only have you got beach access, but it's a Japanese-inspired community living, blended with that ultra luxury beachfront community that Dubai has to offer. So again, trying to understand why this is a good investment opportunity. We need to understand where the government are spending money. So if we think about, the Travel and Tourism Department betting very heavy on this community as it's aligned with the 2040 master plan, we can also see that there is significant road structures being approved by the RTA to build, 3 to 4 bridges to improve connectivity, which is going to reduce the travel time to downtown and DIFC to around 15 minutes. With government spending money here and, infrastructure developments coming to the area, this is definitely going to boost prices in this area quite significantly. And because of these infrastructure developments and government spending, we can get to feel why this area is going to perform well. Coming back to, what makes a good investment, I always think you need to have a target audience. Who is the target audience that we're trying to attract to this community? I think it really stands out to tourists, but as well as the residents of Dubai that, might be working in and around that financial district or working in downtown. Why do I think it's going to appeal to tourists? So already I think tourists, they come from the airport, they have to travel, say, 30 to 40 minutes to the marina, to the Palm Jumeirah from the airport. And that area is very much congested, but then also the building and the quality of the building construction over there isn't that great. Whereas here, we're going to get newer developments, newer communities, a revived beachfront living with the new and improved amenities. And that's really what's going to give that added premium to a community like this. That's what's going to appeal to, tourists coming in now. They're going to come from DXB Airport. They're going to only travel, say, 15 to 20 minutes to get to Dubai Islands. This is where they're going to reside. This is, one of those areas where, think about why tourists come to Dubai. They mainly come to Dubai to either spend money for luxury shopping or to enjoy the weather and actually enjoy the beaches that Dubai has to offer. Where better than Dubai Islands to enjoy those things? We've got a new mall coming to Dubai Islands, which is obviously going to have luxury retails for tourists to enjoy, but then also you've got beach access, right? A lot of these other waterfront communities coming up in Dubai, they don't have that beach access. So I think that is a very unique selling point about Dubai Islands. You've got a mixture of residential and commercial, which I think is going to attract tourists, but as well from a resident perspective, right? Other than Le Mer, you don't really have a beachfront community, waterfront community that has close proximity to DIFC and downtown. And I think that's where these newer communities, which are really offering that beachfront living lifestyle, these are the communities that are going to thrive when it comes to capital appreciation. So the road connectivity is improving. You've got malls, a mixture of other commercials and luxury high-end retail coming to the area. You've got obviously 2 golf courses coming. You also have schools, you have hospitals, you have clinics, 86 hotels. To put that into perspective, I think only on Palm Jumeirah you have around 43 hotels. You're going to have double the amount of hotels in Dubai Islands. That's going to be significant for tourists, right? That's exactly why we're going to be targeting tourists in this area. That's going to be the reason why the short-term rent model, the Airbnb model, is going to work so well in this area. Say residential yields are sitting between, say, 5 to 7% net ROI. Probably you can maximize that to, say, 10+% here in Dubai Islands on the Airbnb model. So that's why this community is going to attract tourists. But then with the other infrastructure developments, like that road connectivity, like the malls, like the schools, like the clinics, like the retail coming in, and obviously you have the existing beach already here, we're going to attract residents who perhaps work in and around the IFC in downtown, and they now have another option to choose from. When we're deciding why certain products are good investments, we always need to keep the target audience in mind and understand, why someone would be willing to pay you that premium to live in this property when, say, there are other property to choose from in, say, Dubai Islands. So it's about identifying a unique value proposition and understanding, why certain investments are going to perform well. What's so unique about this project? It's the Japanese-inspired community theme. It's also, for example, in, a 1-bedroom layout in, say, Mina Rashid with what EMA have to offer, you can only get 1 bedrooms. They don't have a a powder room. It's that attention to detail that Beyond also have to offer. So, you know, in a one bedroom, you know, bigger layouts, you've got a powder room, the ceiling height is 3.2 meters. You know, these are the kind of differences that are going to make a difference to your investment. Again, why would someone pay a premium to live in this Beyond community here in Dubai Islands as opposed to others? Well, I think it comes down to the attention to detail that the developer is also using, right? So for example, what we saw in Maritime City was that each of the buildings had different contractors and architectures behind those structures, right? Why is that significant? Because to be honest with you, the developer could have used one contractor or one architecture for the entire master plan, but they haven't. But they've tried to make everything different, more unique, give something real character and stand out from the rest. Those same principles are going to be implemented in Dubai Islands. When you combine that with, say, the construction quality here, you know, that beach access, got 6 kilometers of open beach, I think that offers something unique in comparison to the rest of the community. Island B, you have had some other launches, you know, similar price per square foot, you know, some launches on Island B. Obviously, there's talks about Ellington launching here. And obviously you have Baygrove. Yes, Baygrove had the lowest price per square foot. Doubt it's going to be a phenomenal community, but not all of the buildings have that open sea view, right? Which is obviously justified in the price per square foot. Price per square foot gives you some narrative. It's not the only thing that you should consider. You need to understand price to value ratios. Developer like Beyond, disruptors in the market, they need to come in with a bang. They need to give you more value for what you pay. And I think with the architecture, the actual concept behind the community, the floor plans, and obviously the beach access, I think this is what's going to really differentiate this product amongst other projects in the market. There are going to be more launches, and that's why it's so important to get into the initial stages of a master community, because the developer is going to increase the prices with every launch that is going to come. We've seen it already firsthand in Maritime City. So yeah, definitely that formula is going to be replicated in the master community here in Dubai Islands. And you know, as initial investors, the developer does give you that protection with every price increase that they implement. You know, when you think about waterfront properties here in Dubai, you know, Dubai's coastline is 72 kilometers, right? We have established waterfront communities here in Dubai. All of them are pretty much trading at, you know, between 4,500 all the way up to 10,000 plus dirham a square foot. So there definitely is an opportunity here in Dubai Islands with Beyond, with what they have to offer in this project. But, you know, when we factor in basics of supply and demand, right, less than 0.01% of properties in Dubai have direct beach access. That's significant, right? We're talking about a limitation within a limitation. As it is, waterfront properties are scarce, but then those properties with direct beach access, they're even more scarce. So, you know, these are the kind of investments you want to buy because they have a unique value proposition. And with that, these are your bulletproof investments. You know, these are the sort of investments that are going to hold their value irrespective of what the market does. And I think that's so important. I think identifying these kind of opportunities, that resilient products that can actually weather a storm, that is exactly where you want to be allocating your capital. So last week there were some leaked details regarding this project. It's called Sunrise Valley, but to be honest with you, the only thing confirmed so far is the location. So if you've heard some prices and sizes, please ignore them for now because we don't have the official communication from the developer, but what we do have is the location. So that location is Nad Al Sheba 1. This is neighboring District 11, as well as other communities such as Nad Al Sheba Gardens. So what we can do is we can assess some of the pricing activity in these locations to understand whether it's going to be a good project to invest in when that price information is confirmed. But to be honest with you, knowing what kind of projects and quality H&H deliver on is definitely not one to miss. Based on H&H's track record, this is definitely going to be a very good investment opportunity, even if the prices come slightly higher than what they've already been quoted. I'll give you an example. Nad Al Sheba Gardens, right, currently selling at 2,000 to 2,500 dirham a square foot. Handovers are starting to happen. You can get properties on the secondary market as the first initial phases start to hand over, but then also, you know, 3-bedroom townhouses are being sold directly by Maras between 6 to 6.5 million dirhams, coming out around 2,000 dirham a square foot. If we have a look at District 11 as a location, yes, there are, you know, discrepancy in terms of the developers coming into that location, but if we look at some of the developers or developments that are coming around that location, for example, Opal Gardens, I think could be a comparable project in terms of size, not necessarily in terms of quality, because H&H are definitely going to deliver a greater quality product, but I think sizes maybe something that we could reference. But again, Apollo Gardens, we're looking at 1,700 to 1,900 dirham a square foot. And then another more slightly comparable project could be the Watercrest by Ellington. So this project was launched last year. They were a combinations of 3-bedroom townhouses and 4-bedroom villas. But if we have a look at the townhouses, we've got 3-bedroom townhouses with great built-up areas, averaging around 3,800 square foot, but the plot sizes were slightly on the smaller end, around 2,700 square foot. But the price per square foot of this was between 2,000 to 2,100 square foot. You were buying a 3-bedroom townhouse. Yes, sizes on the built-up great, but you're paying a price point of around 8 million dirhams. So definitely an end-user product than an investor product. So this location is significant, and the communities like Sunrise Valley are going to appeal to the masses because they can avoid the traffic issue that is happening in the bow tie of Dubai. The government have already spent billions of dirhams improving the road connectivity through Al Ain Road, which is a 6-lane highway, which gives you very good access to downtown and DIFC. And this brings me on to my next point. Why do I think this community or surrounding areas are going to perform very well is because Sunrise Valley is located between two growth hubs of Dubai. So on one end, you've got DIFC and downtown, but then on the other end of the spectrum, you've got Silicon Oasis, which is part of the 2033 economic agenda, as well as the 2040 master plan of Dubai. So we have to follow the government money, which is flowing into Silicon Oasis as it's part of their long-term economic growth plan. And with that, you're going to have a lot of startups and tech companies operating as you already do, but it's going to continue going into the future. What else is coming in Silicon Oasis, right? So through inside information, we've come to find out that Emirates are going to be opening up a new headquarters in Silicon Oasis, which is going to accommodate for 4,000 employees. Why is this significant? Because these are going to be the people who need choice in terms of communities and villa communities where they can bring up their families. And that's why I think the land parcel H&H have got is significant. So that brings me on to my next point. Who is your target audience, and why would they be willing to pay you a premium for these townhouses and villas that are going to be delivered by H&H? Well, apart from obviously the quality that we know is going to be delivered by such developer, it's actually the location, right? Because we're capturing an audience who, they might work in and around DIFC in downtown, but equally it also attracts people who would be working, say, perhaps in Silicon Oasis, right? These are the kind of tenants or buyers that are going to be willing to pay you that premium to avoid the traffic in, say, the more established bow tie of Dubai, where they can see better value, better quality in, say, Sunrise Valley or surrounding communities. Having that framework of analysis will really help you to identify the best opportunities here in Dubai. So, for example, look at comparable projects. For instance, townhouses, say in Talal Al Gaf, you've got the Elan townhouses. In Dubai Hills, you've got the Maple townhouses. Transactions are averaging around 2,500 dirham a square foot. Now, whilst we don't know what the prices are from H&H, we do know that they're going to be delivered under that price point. And of course, you're going to get a far superior product in terms of quality. So if we have a look at the off-plan supply, the ready supply, definitely we're going to get a competitive price per square foot, but also the quality that that project is going to be delivered at is going to be far superior to anything else in the market. Again, we can already understand where the government have spent money in terms of infrastructure, where they're spending money in terms of surrounding areas like Silicon Oasis, which is going to overall boost the demand for housing, and that's going to have direct price increases in, say, neighboring communities like District 11, Nadal Shiva 1, Sunrise Valley. So based on, the limited choice for good quality townhouses in Dubai, based on, the road connectivity that's going to benefit locations like Sunrise Valley, we have good complemences to understand why prices are going to increase and why that area is going to overall perform. I think the best thing about this project as well is that it's going to come on a 50-50 payment plan. So, majority of the government-backed developers, they have more aggressive cash-heavy payment plans, 80-20, 70-30, but H&H are going to come in at a 50-50 payment plan, which means you need 50% over the construction period and then you pay 50% upon handover. This part of the payment plan can be mortgaged. I think this payment plan makes a lot of sense whether you're an end user or an investor. As mentioned, none of the details are actually officially out yet, so please do get in contact with me, because when they are out, we will be making detailed reports on how this is going to be a phenomenal investment opportunity. Hope you found today's video useful. We've gone through a framework and analysis that we use to understand good investment opportunities here in Dubai. There's only so much content we can deliver in a YouTube video. If you'd like any more details on the projects that were discussed today, or any other analysis related to any other investment opportunities here in Dubai, please contact me on the details below.